Hi, welcome to Quote Booster. This is our data story series, where today we're going to be examining gold versus the S&P 500. We've taken all of the historical data from the 1900s to 2026, comparing how a 10K investment in gold versus the S&P 500 would have performed. We don't just have the data in a static format, but it's totally interactive. You can change your investment start year and zoom in and out on the data to see what happens. But let's start with an investment start year of the year 2000. We saw an article that was showing how gold has outperformed the S&P 500 for this 25-year period. And according to this data, gold has outperformed by over 200%, which is fantastic. But the year 2000 is kind of arbitrary, because why would you have invested in 2000 versus any other year? Let's go 5 years after that time period and see how the data changes. Gold still outperforms, but only by 85%. The 212 percentage gains is diminished in only 5 years. Let's jump 5 years more in the future and start it in 2010. You'll notice that the S&P 500 is now the better investment by over or nearly 50%. But if you look at the first few years, it wasn't until 2013, 3 years into your investment, that the S&P 500 would have done better. You'll see different spikes, crashes, for example, during the COVID pandemic. Let's jump 5 years even more in the future. Gold again reigns supreme, but only by 16%. To take our 5-year increment even further to 2020, you'll see that gold has outperformed by 40%. The numbers don't lie, but some of the dates you choose to show those numbers are semi-arbitrary. We wanted to be able to show this, and we've even provided buttons down here at the bottom that'll give you a random time period, just so you can see the complexity of the data that you're comparing. Let's click a random date between 1950 and 1974. Every time you click this button, the start date will change. This is 1971. Gold outperforms by 65%. But if you change it and you go to 1951, then the S&P outperforms by 121%. If you change it to 1953, 2 years later, it outperforms by 112%. But if you switch that to 1963, then gold is the better bet. Each time you click any of these buttons, you're choosing a random date within a 25-year period, just so you can see how significant when you start investing has an effect. So some of the simplistic charts that you see there, there's more complexity behind some of that simplicity. And we wanted you to be able to have an interactive chart so you could see that. If you scroll down even more in the article, we show you the pros and the cons of investing in stocks versus investing in gold. Each of them have their use as an investment tool. And one of the last things we wanted to look at is how the performance has done for a decade period, starting from the 1900s. And you'll notice there's a lot of green on this chart, showing that long-term investments in gold or in equities is a great investment for your future. This suggests a basic principle that as you trade current money for future money, the returns are great and they're out there. The world is creating more technology and more innovations through companies in the S&P 500 and more. Gold is becoming more valuable for so many different reasons, but investing in your future will provide great dividends. Thank you for looking at our data article about the S&P 500 and gold. Please feel free to click the link in the description to play around with the numbers yourself. This is one of the first videos that we've made. So please provide feedback and information about how we could do better, what data stories you want us to have, and what information you would like to be more interactive so that you can dive into the numbers and learn more about investments, equities, and economics, and all things financial to make a brighter